Welcome back to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Wednesday the 13th of May. Looking at dollar yen. Now, what we've seen in the last few sessions that I think is really interesting in dollar yen, we've seen three strong bull candles around the turn of the week. That accelerated the market through the downtrend resistance, through a whole clutch of resistance, actually 106.90 being key as well, and also 107.50, the reaction, the lower reaction high of the downtrend. But yesterday's candle was a retracement move, and that retracement move really does lay into the fact that it could be a repeat of this here, the early April sell-off that we saw after the rally. We saw the market retracing the move and then just drifting over the course of the next few weeks. Again today, trading lower. That doesn't bode well. I spoke yesterday about the fact that the market needed to now start to form some decent foundations of a recovery. And the question is are the foundations of that recovery already being torn down? Because basically what we see is the market continuing to drift lower today. Those momentum indicators on the hourly have gone from being strong, being positive, to now turning corrective. Look at those MACD lines coming together and accelerating lower. The RSI back into the low 30s. It suggests that at best we're sort of seeing the market, that the rally being neutralized, and we could ultimately see it now turning corrective again. Below 106.90, that is an old pivot line. You saw that on the daily chart. Well, it sort of is again a basis of a pivot on the hourly chart as well. To break under that, you start to turn corrective on a more decisive manner. So that is your key level I think you need to watch. If you start to break underneath 106.90, it really does turn corrective again, and you sort of lose the impetus of that recovery outlook. So this is a really important move, I think, on dollar yen. Faltering on the RSI, basically around that 50 mark, similar to where we saw back in April as well. That doesn't bode especially well. The MACD lines don't really look as though they're doing great. Neither do the stochastics. Yeah, it's a real concern, I think, if you're sort of trading this as a recovery. And again, the market now dropping below 107 figure, so it's sort of on the brink now, isn't it? But yeah, the recovery doesn't look to be doing all that well. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos, and also you can watch our Trader Talks videos where you can gain some top trading ideas.